Hi everyone. So today we'll see the money and credit from the economics of CBSE class 10. So all are preparing for the exams I know. So we will go for a short review or revision of the chapter. Only the important things we will discuss here. It will take only 10 minutes. So this is just an introduction. We will see the money and credit chapter. In many of our day-to-day transactions, goods are being bought and sold with the use of money. The reason as to why transactions are made in money is that a person holding money can easily exchange it or for any commodity or service that he or she wants. So here you will see the summary of the chapter. So with money we can buy and sell anything. So first thing we are seeing is double coincidence of wants. So we'll see what is double coincidence of wants. When in the exchange both the parties agree to sell and buy each other's commodities, it is called a double coincidence of wants. In the barter system, double coincidence of wants is an essential feature. For example, the owner of X wants Y and the owner of Y wants X. So both of them can purchase each other's things. So it is possible, it is perfect only in barter system. So when the both needs of the both people, both parties are meeting in a system, in an exchange system, it is called double coincidence of wants. Next point is money as a medium of exchange. Money acts as an intermediate in the exchange process. That is why it is called a medium of exchange. In the course exam, it may be like this: why money is known as a medium of exchange. So the answer you know, money acts as an intermediate in the exchange process. That's why it is called a medium of exchange. A person can easily buy anything or sell anything using the money as he or she wants. So next is modern forms of money. In the early ages, Indians used grains and cattle as money. Thereafter came the use of metallic coins like gold, silver, copper coins, etc. Now also we are using sometimes. Now the modern forms of money include currency, paper notes and coins. So these sometimes deposits and cash form, non-cash forms like checks are also we are using as a exchange medium. Now currency. In India, the Reserve Bank of India issues currency notes on behalf of the central government. No other individuals or organization is allowed to issue currency. The rupee is widely accepted as a medium of exchange in India. So we'll see next is bank deposits. The other form in which people hold money is as deposits with banks. People deposit their extra cash with the banks by opening a bank account in their name, and the banks accept the deposits and also pays an amount as interest on the deposits. And the deposits in the bank accounts can be withdrawn on demand. That's why these deposits are called demand deposits. Also, instead of making payments through cash, we can make use of checks instead of cash. Now we will see loan activities of banks. Banks keep only a small proportion of their deposits as cash with themselves. So in India, it is 15% of the deposits banks will keep with them as cash reserve ratio, and the remaining they will give us loans. This is kept as a provision to pay the depositors who might come to withdraw money from the bank on any given day. So banks use the major portion of the deposits to extend loans, and they will charge a high interest rate on loans than what they are offering for deposits. The difference between what is charged from the borrowers and what is paid to the depositors is their main source of income according to the banks. So this is what banks are earning. They will be charging more interest for the loans, and they will give less interest to the depositors. So the difference amount between the interest of loans and between the interest of deposits will be their income. Now, role of Reserve Bank in India. The RBI is the only authorized body that can issue currency in the country. So they print, distribute and regulate the flow of currency in the economy. Second point, the Reserve Bank of India also supervises all other commercial banks in the country. Then third point, the RBI will also dictate interest rates and the CRR, cash reserve ratio, limits to the commercial banks. And finally, it controls credit in the economy. This can be said to be the primary function of the Reserve Bank of India, or to control the credit facilities, credit sources of a country. Now, what is credit? Credit is the activity of borrowing and lending money between two parties. The terms of credit are three things. First is interest rate. Second is collateral and documentation requirement. And the third one is the mode of repayment. These three things together is called terms of credit. And what is collateral? Collateral or a security is an asset that a borrower owns, such as land, building, vehicle, livestock, deposits with banks, and uses this as a guarantee to the lender until the loan is repaid. And if the borrower fails to repay the loan, the lender has the right to sell the asset or collateral to obtain payment. So it is what a borrower is keeping in the bank as a security for their loan. So once again, we will see the activities in a bank. The people who are having money with them, they will put the deposits in the bank, and the bank will keep a cash reserve ratio, and the remaining money they will give to the poor people, those who are in need, those who want money as loans, and banks will charge a high rate of interest from the borrowers, and will give a small means lesser interest rate to the depositors. So deposits versus loans. Banks receive deposits from those who have more money with them, and the depositors will receive an interest also for the money they are depositing in the banks. Banks use the major portion of this deposit to extend loans. As we have seen in India, it is 15% that the banks are keeping with them as a reserve. And there is a huge demand for loans for various economic activities. Now also many are in need of money. So banks are giving loans and charging a high rate of interest on loans than what they offer for deposits. So this difference between what is charged from the borrowers and what is paid to the depositors is the main source of income. So now we will see the different sources of credit. There are two sources of credit. One is formal and another is informal sources of credit. So what we have to notice is that formal sources of credit means the loans that are generally provided by banks and cooperatives, whereas the loans that are provided by money lenders, traders, relatives, friends, these are informal sources of credit. So formal sources of credit is supervised by the RBI, whereas there is no organization which supervises the credit activities of the informal sources of credit. And second thing is, what we notice is the formal sources charge a lower rate of interest, whereas the informal sources of credit, they will charge a higher rate of interest. And the formal source of credit, their main motive is social welfare, but the informal sources of credit, their main motive is profit making. So just to find out and understand the difference between the formal sources and informal sources of credit, where now we will see SHGs, self-help groups. A typical SHG has 15 to 20 members, usually belonging to a neighborhood, who meet and save regularly. Also, these savings, it can be vary from 25 rupees to 100 rupees. It depends upon the ability or capacity of each member. And the members can take loans, small loans from group itself to meet their needs, and the group will charge only a very low interest rate. Now we will see how it is helping the poor. Poor households are still dependent on the informal sources of credit because of two reasons. One is, banks are not present everywhere in rural India. Second thing is, even if banks are present, getting a loan from bank is much difficult than getting it from the informal sources of credit. So to overcome these problems, people created self-help groups. Self-help groups are small groups of poor people which promote small savings among their members. So better than taking money from the informal sources of credit and putting themselves in trouble with the high interest rates, it is very useful. They are self-help groups. They will give small loan amounts, small, sometimes big amount also they can raise among the members, and they can meet the necessities, the needs, emergencies of the poor people with a small interest rate. We can also say in India it is set apart. The self-help groups are set for helping poor people, especially women. A typical self-help group comprises 15 to 20 people from the same neighborhood we have already seen, and the people can borrow money from these groups during an emergency or when they are in need. They charge a minimum rate of interest from the borrowers, and it will be very helpful for the poor people, especially in the rural areas. So these self-help groups, especially it will help the poor people and the women to start up their own businesses, small scale industries or MSMEs, or agricultural sector. So they will help them to start up their own business or their own way of income, so that they will be independent financially. And once the SHGs have managed to save a defined amount of money, they are also eligible to take loans from banks without collateral. And because if any person who is taking loan from the bank is not able to repay the loan, all the members in the SHGs are equally responsible to repay that amount. Therefore, banks are ready to give any amount of loan without any collateral. The main purpose of introducing these SHGs was to increase small-scale employment opportunities for the rural people so that they could start a small business to earn a livelihood. The regular meetings of the group provide a platform to discuss and act on a variety of social issues such as health, nutrition, domestic violence, etc. So it is not only a platform for becoming self-independent or financial stability, but also for discussing all kinds of social problems the women and the poor people are facing. So here once again we will go through all the slides and we'll finish up our revision. So I hope this will be helpful for you. Thank you.